Well, often I think when we're looking at life cycle change, it's often either a change in a manager, it's a change in a business, and that is, that change is creating usually some type of opportunity. And when we're looking at those stocks in general, the most important thing is, are they operating in a growth category, in a sector that is growing, that has viable characteristics that could make this a good investment? And what are we seeing in this particular company that we think it can be successful in that environment? So, for example, in the portfolio today, we own a company called Dollar Tree. And Dollar Tree, is a value-oriented retailer, and we have quite a few value themes in our portfolio today. That is oriented towards selling prices for $1. But what makes it really interesting is they generate some of the highest productivity levels in the U.S. dollar store industry, despite the fact that they sell things for $1. And what we've developed over the years a relationship with that team to understand why they are good merchants. And recently, the change in the case of Dollar Tree is they bought a business called Family Dollar, and Family Dollar kind of works in a value category, but at multiple price points, but has been significantly mismanaged for a number of years. And so, from our perspective, we can take the change here is buying a business which still had a decent brand in Family Dollar, because we recognize those are very hard to build over time, but was just operationally mismanaged within the market. So we can take the best characteristics of Dollar Tree and blend the two together. So we, over time, in our particular fund, we can own up to 25% of positions like life cycle change stories in our funds. And we're constantly looking whether the opportunity and the manager that's running that businesses can get it done, because often life cycle change are really operational change-oriented businesses. And do they have the team and the strength to actually get that completed? Yeah, I think obviously over time is, do they have a track record of success? Are they truly invested in the business they're operating? We put a big premium on managers that own a lot of share of their own particular company. And then over time, it's about us developing a relationship with that manager as a key reason that we will want to invest or not. And frankly, more often than not, if we cannot develop that relationship, you don't end up seeing companies like that in our portfolio, because you place a huge premium on getting to know what it makes that manager tick, because that's key in good times and in bad times when looking at a particular company. How are they going to make it? Well, I think obviously from our perspective is, red flags can exhibit themselves in different ways. One is, as we're doing our due diligence, we get to, a sense for the character of that management team and the character of the people they try and hire. And similarly, inevitably, it usually follows itself up in the financials of a company. And that can be, if they're particularly acquisitive, you can find that in declining returns on capital, for example. And so we're always, as a team, trying to combine both the financial and the character of the management teams that we're kind of working towards.